Ultimate Traders on Reddit. Nathan from Queens, October 1st, 2022. We are just riding off at 52-week lows like I did video last week and said 52-week lows incoming. I apologize. I'm not a bear. I just read the data. The data tells me what should happen. If the market doesn't trade where it's supposed to me, I will just stay on the sidelines. I'm in about 75% cash still right now and waiting for an opportunity. If it goes according to plan, I will trade more. That's video 3. But video 2 right now is the state of the market. And just like I was just saying, we've just made new 52-week lows. And unfortunately, we're going to have earnings in 2 weeks kick off. We're going to have a couple before, but most companies, not all companies, March 31st is the end of the first quarter. June 30th is the end of the second quarter. September 30th is the end of the third quarter. December 31st is the end of the fourth quarter. But that's not for every company. So that's why we get a mixture of earnings. That's just in general. That's how it is. We're going to get earnings in 2 weeks. This past week, we had a warning from Ford, about the margins. KMX, with the used car market, they had terrible earnings. Nike, the earnings were okay, but the margins were horrible. Micron Technology, that could tell you about NVIDIA, AMD, Intel, guidance was off a cliff. I mean, horrible. And before, a couple of months ago, the NVIDIA guidance was off a cliff. So if guidance is way down and Micron missed, does NVIDIA even guide down on the next? Those are the things that we have to prepare for. As it stands right now, I'm still there. S&P 500, 3,300 to 3,600, and NASDAQ 9,500 to 10,500. However, I had the S&P 500 earning $220 for this year. That was even since the beginning of the year, because we only had 2 quarters of reports. I didn't feel at that time, at any time, that I had to move my numbers much lower. Keep in mind, though, there are other analysts that felt that the S&P was going to earn 250. I think right now the average is like 233. It came down from 240. And the reason why that's important is I'm not that confident that we're going to do 220 anymore. Remember, we only had 2 quarters of reports. Our big rate hike happened, the first big rate hike happened in the middle of June. That affected minimal the second quarter. These rate hikes are going to affect the third quarter. I'm not that confident in my 220. And based on the earnings that kick off in 2 weeks, because middle of October, we're going to get a lot of earnings, I might have to lower it, maybe 5%. If I have to lower 10% from like 220 to 200, we're going to see a lot lower in the S&P. A lot lower in the S&P. But I can't, and that's why when people on CNBC or people are saying, oh, the chart tells me this, oh, candlesticks, oh, head and shoulders. Dude, I know more, and I don't care, and this is not an ego trip. Okay, I've been trading since I was 14. I don't even do it for the money. I'm not getting paid millions. I just do it because I've been doing it since I was a kid, and I want to buy a whole bunch of cars, and I have cars. Charts do not buy stocks, all right? A chart, even if you have the best chart in the world, cup and handle, head and shoulders, whatever you want to say, candlesticks, whatever you want to say, it does not buy stocks. I did a post on Reddit saying that the strongest emotion that you could have in the stock market is fear. There's fear everywhere in the stock market right now. Yesterday, September 30th, the last 10 minutes, the whole market dipped like 1% in the last 10 minutes. That's fear. Chart doesn't tell you to buy. You know what happens when you see massive selling? A chart is past tense. A chart is supposed to show you what is going on at the auction. The auction is where a bid and ask meet. A bid and ask meet. What happens when there's fear? When there's fear, there's no bids. There's a buyer strike. No one bids. And then sellers panic. They sell and market. A chart isn't going to tell you that's what's going to happen. So fear is the biggest strike. At 2 p.m., you don't have any fear. At 11 a.m., the market was up. I was bidding on 8 puts. 8 puts. I kept trying to bid on puts, and that's going to be video 3. Puts, because every single rally is a head fake. Every rally is a head fake. S&P at 3,600, because you heard my ranges. NASDAQ at 10,500. That's like the high of trading range, okay? The trading range is, the safe trading range is 9,500 to 10,500, 3,300 to 3,600. That's the safe range. So we were not safe. Everything was a head fake. And the only reason I didn't buy a whole ton of puts is because 414, I was so mad at the options that expired. But this video, the state of the market, we have earnings in 2 weeks. And judging by what's going on, and inflation's still hot, and rates are going to go up, things are going to get worse. Things are going to get worse. This past week, we had a whole bunch of Fed speakers. There's 12 speakers, and then Powell's number 13. Well, he's the main guy. They're saying the Fed is not going to back off. And I mean, rates are going to go up. They've been saying that for months, but the market, even bond people, the Fed is telling you what's going on. People just don't want to accept it. We got to accept that we're going to have between 4 and 4.5% Fed funds rate by the end of the year. I believe they will lower it, but it's going to take some time to lower it. So Fed funds rate going up, earnings going down, back off. I see the data getting worse before it gets better. Will it get better? Yes, it'll get better. But right now, because I'm reading the data daily. And that's a lot more important than people trying to forecast months from now, a year from now. Because to me, that's a cop-out. They just don't want to do the heavy work that I do. I'm doing the heavy work, checking day by day. What changed? What happened? Okay? When Nike said those margins were bad, a few weeks ago when FedEx is a big indicator. Nike does a lot of global sales. That's a big indicator. Apple just said this past week that they're not raising production on the iPhone 14. That should give you alerts saying what's going on. Those are not bad. Those are terrible signs. I'm reading the data, seeing what's going on, and things are going to get worse before they get better. But like I said in the beginning of this video, I promise you, I will read the data better than billionaires and money managers, and that's why they should give me an opportunity. I'm not even joking. It's not even an ego thing. This is what I've been doing. I've been doing it forever. I chose to go into the abyss, and I came out of the abyss last January because of AMC GameStop. So I'm waiting for an opportunity. If it doesn't come, it's okay. I'm still doing fine. But I'll choose to post or not to post. You guys aren't paying me. I don't even care that, I don't care for paid clicks. I don't care for likes, whatever. I don't even care. I want a good opportunity, and I reached out to Muddy Water, but we're not even going through that. This is video 2, State of the Market.